Similarly, it's really important for you to be aware that in the event that you need uh, for your credit score to be upgraded or your debt to income ratio to be upgraded due to a collection status being changed, then you can request for a rapid rescore to be done by a lender so that they have a copy of a credit report that is going to reflect what is accurate for that moment versus, or a score that is reflected for accuracy at that moment versus what they would have gotten for the previous 28 days. Your account summary that shows all of your debts, and as I went over line by line, the date that they were open, first reported, date of status, so on and so forth, are all going to be located in this section of your credit report, which shows your account history, basically. Under your account history, you're going to find your payment history. And on Experian, it's going to show something like this. You're going to have back, let's say, from the last 5 to 7 years, and it's going to give you a month by month. So, for example, it will say okay, meaning that everything was kosher. But then here in February, there was some late payments. And it will give an overview to you of where you might need to double check. So, for example, in 2007, in February, there were some issues. And you might be able to actually take a look here and see that October, September, and March and February, when this account was open, so between November of 2004 and November of 2007, there were some issues. The primary issues are here, and that will give you a clue as to what months and years you need to take a look at, where there may be issues. So that is equally as important in terms of your credit history. Now, your account history shows years of individual payments that you've made month by month on each of your credit accounts, from loans to credit cards. And your payment history accounts for 35% of your credit score, which is the largest contributing factor. So it's crucial that you perform your due diligence and make sure everything is accurate in this section. All right. A lot of times you're going to see with someone who's gone through a restructuring, maybe they've gone through consumer credit counseling, or maybe they have done some other consolidation, or they have filed bankruptcy. You're going to find inaccuracies that are large in this section. So depending on your individual circumstance, what we're looking for here is to confirm accuracy. Accuracy is the largest area that we're going to find things that are going to need to be removed, disputed, and removed based on inaccuracies or erroneous information. So very, very important there. Okay, so some of the things that you're going to see on your credit report with regards to status are these types of statements. The account is now current, but was 30, 60, 90, or 120 days late at some point. The account is now current, but was previously in collections. It's currently in collections. It had a paid collection, which, believe it or not, a paid collection affects your credit negatively, just like a regular collection does. We're going to be going into each one of these actual factors separately. Each one of them is going to have their own video. And the reason for that is you need to understand all the ins and outs of what these statuses mean. What they're allowed to do, what they're not allowed to do, what is considered inaccurate based upon these statuses, all very, very important in terms of the disputing process and how these items can get removed for you. In a lot of cases, even if they're still owed upon, you can still make it to where they're not affecting your credit negatively. And of course, charged off accounts, what they are, what can be done about them, so on and so forth. But these are the types of things that you're going to find on your credit report in the section that shows you the status, also in your payment history section. Okay, we're now taking a look at a sample of an Equifax credit report, and we're only taking a look at the very last page of it. I want you to follow the cursor that I've got here and just take a look at these different sections, okay? This section is where we're starting, okay? Fraud and data warnings. This is where, for example, we recently heard about Equifax having a huge loss of data security and hackers hacking in and getting a whole bunch of people's information. And Equifax has now given people the ability to freeze their credit reports. What that means is there is a fraud alert or a hawk alert put on your credit report that will actually provide you with the protection of additional identifying information that must be provided to anyone who's pulling your credit bureau, and it does not allow for automatic approvals or pulling of your credit report for the purpose of protecting you from identity theft. This section right here, fraud and data warnings, is where that information would be provided. And you would see that, and you would see a date where that actually took place should you request that. And by the way, I will be doing a video with regards to the Equifax data breach that I want you to pay close attention to, because those of you that have data that might have actually gotten taken, that are concerned about identity theft, there are ways to protect yourself you may not be aware of, and I want to make sure that you have that information. But moving on here, we have the consumer statements. It'll give you the date of when the statement was made, and this is in sections where perhaps a dispute did not go the way that you anticipated or needed for it to go, but the consumer is allowed at this point to put a statement on the report that every single lender that pulls your credit report will actually see. So perhaps you had identity theft, or the thought of identity theft might be happening at some point. In this case, the example is March of 2000 and I believe that's 8, where the consumer reports that there was a lost or stolen wallet in 2000 caused a lot of his problems when applying for credit. Now, in this case, this person is forewarning lenders that it's possible that the reason why his credit score has been lowered is because there were actual discrepancies with regards to possible identity theft when he lost his wallet back in 2000. And there are many, many other consumer statements that can be made that a lender must take into consideration and will take into consideration if it is actually put on file under consumer statements, and we'll show you how to go about doing that properly so that it's not questioned in the long run should a dispute not go the way that you are wanting for it to go, or there is erroneous information that doesn't seem to be being removed based upon the laws of the Fair Credit Reporting Act. Now, inquiries is the main thing I want you to pay attention to. Inquiries are something that are largely misunderstood amongst consumers. And that is because of the fact that, number one, inquiries are when a credit company, a credit or a lender will pull a hard copy of your credit report or a hard inquiry of your credit report. Soft pulls do not show up in the inquiry section. Now, an inquiry is pulled anytime that you are being approved for, not pre-qualified now, not pre-approved, but solidly approved for a credit card, a loan, a revolving charge account, or a mortgage. Anytime there is actual application to go forward involved with lending. So here you will notice an example of Capital One, both in January of 2004 and January of 2007 on this sample. And you will find that what's going to happen here is these credit inquiries will remain on your credit bureau for 2 solid years. So just remember that a hard inquiry, a hard pull on your inquiry remains on your credit report, remains on your credit report for 2 solid years. Soft pulls when you're pulling a consumer report for yourself or when you're becoming pre-qualified, those do not show up as inquiries. Now, the reason why inquiries can damage you, all right, is because a lot of times when you've got too many inquiries within a 2-year period on your credit bureau, it can suggest that possibly you are attempting to receive credit that you are not necessarily qualified for, but you're searching and searching and searching for different lenders that have different credit score qualifications that maybe you can eke through, and that may suggest that you are overextending yourself for what you can really afford based on your debt to income ratio, or based on the fact that there are previous credit problems that your score is not allowing them to provide you with the credit you are looking for. So you're just out there with feelers. Right. Now, I want to clarify this. If there are many, many inquiries that are done within the same day and they are clearly financing inquiries, so let me give you an example of this case. There are a great number of people that will walk into a car dealership and they want to purchase a new Ford Focus. So what will happen is the first thing that happens, you sit down after test driving the car, this is the car you want, this is what you want to pay for it, you negotiate back and forth for a minute, and then the finance guy goes to the desk man and says, hey, look here, sales guy, we need a credit application. We need to see what we're really working with here and what we can negotiate for this guy and what we can use against this guy to get our finance people to be able to make some sort of additional percentage on it. And I will go into how all that nastiness works in another video. But here what's important for you to understand is that they're going to pull their own credit report. Automobile dealerships generally will use a credit bureau that is connected to Equifax called CBI. What that's going to do is provide them with an overview of what was once considered the harshest of stipulations as far as credit scoring was concerned. CBI is going to give them an overview of what you have got in previous loans that may have to do with automobiles and a lot of other information that isn't necessarily provided on the other 3 credit reports, as they are the vendor. They are the actual dealership. They want to know these things, and they want to be able to provide their financing options with this information. Now, in order to know where and what type of paper, so there's different types of financing paper, and we'll be going into that also. There's A paper, B paper, C paper, and D paper. And those types of papers are based upon your credit score and what your past history has been. A paper is for people who have AAA credit. B paper is for people who have some problems, but it's not that big of a deal. Most of the time, they're going to be able to get you financed. But when you get into C and D paper, that's when this becomes a real issue. And we will discuss that in a later video so you understand. But your inquiries that are on there with regards to automobile dealerships, because all the banks are going to run them too, if they are clearly for the same item, they will all count as one. Thanks so much for listening to this video. I hope it helps you to understand better how you can analyze your credit report and how intricate it actually is. We'll be going into separate areas that I will dedicate full videos to, like this with the example of the inquiries and how all of this works. I just wanted to give you an overview and give you something to look forward to when your credit reports arrive. I hope everybody has a wonderful weekend. Happy Friday.